And there we go. All right. So, business loans. Which one is right for your small business? This is brought to you by the Small Business Resource Center, who is part of the Jefferson Franklin Community Action Corporation, and we are funded by the U.S. Small Business Administration. The Small Business Resource Center is a nonprofit organization brought to you by the Jefferson Oh, sorry about that. Brought to you by the Jefferson Franklin Community Action Corporation. We are funded by the U.S. Small Business Administration through the Community Navigator Pilot Program. We provide no-cost consulting to entrepreneurs and small businesses in Jefferson, Franklin, Washington, St. Francis, and St. Genevieve counties in Missouri. We also connect these clients with resources or spokes to assist them free of charge with other services such as accounting, legal, marketing, and funding through loan application assistance. So, I've referred to spokes a couple times because our organization is based on a hub and spoke model. So think of it like a wheel. The SBRC is the center of the wheel, which we're the hub, and then our spokes are sticking out like the marketing, legal, funding, and accounting spokes. As a disclaimer, the purpose of this presentation is to provide general information only. It is not intended to be a comprehensive summary of any ordinances, regulations, or laws. The information presented does not constitute legal advice. One should always contact their attorney, CPA, or any other authoritative agency with any questions or concerns. So, a big question that we get all the time is, can you give me money? Can the SBRC give me money? Can you give me grant? Can you give me a loan? The SBRC is not a funding source. Like we talked about, we were awarded a grant through the SBA, but that grant allows us to operate. So we were the one out of 51 agencies nationwide to be awarded this grant, and we are the only one in Missouri. This grant provides us the funding to be able to operate the SBRC, and this also allows us to pay for the services that you as a client receive from our resource partners and spokes. We assist clients in applying for funding in multiple ways, like assisting them with writing business plans, assisting you with applying for loans, and then we can also refer you out to the various contacts that we have at financial organizations, and you can receive more in-depth consultations from them as well. So again, we are not a funding source in any way. The grant that we received allows us to operate and help you. So, we're going to go over a few things today, including a business plan, should you have it or not, the SBA lender match tool, how you can get ready. We'll go over the SBA loans, some microloans, and personal versus business funds. So to start out, a business plan. Oh, give me just a moment here. We've got somebody popping in. All right, so a business plan. Before applying for a business loan, you should prepare your business plan. This doesn't matter if you are starting up a business or you're the owner of an established business who's been in business for, 15, 20 years. Nowadays, lenders want to see a business plan. So if you're starting up, how do you plan to operate? What are your financial projections? And then if you've been in business, how have you been operating? How has sales been? How has business been? What have your financials looked like? Are you going to be a good investment or are you going to be a good prospect to be able to give this loan to? Are you going to be able to repay it? Things like that. And again, just keep in mind, us here at the SBRC can help you with writing out that business plan. So, where do the funds come from? You'll hear these referred to as SBA loans, but in reality, the SBA only makes direct loans in the case of businesses and homeowners who are recovering from a declared disaster. By using the SBA lender match tool, you can be connected to a lender in your area. Again, the SBA does not make direct business loans unless the above scenario applies, which is businesses and homeowners recovering from a declared disaster. In the chat, Brittany has shared the link for the lender match tool from the SBA site. So, what is an SBA guarantee? The SBA works with the lenders to provide a guarantee on the loan. This means if the business defaults on the loan, oh, I guess I cut myself off there. Sorry about that. The SBA provides a 40 to 90%, depending on the loan specifics, guarantee to the lender. So if the borrower defaults, the SBA pays the guarantee fee to the lender. But you, as the borrower, are still liable. So what's the process in applying? So through the SBA site, you'll go ahead and follow through and you'll answer a few questions about your business in about 5 minutes. And then you'll use their lender match tool. And then after that, you'll receive an email. This usually happens within about 48 hours, 48 bus- uh, 2 business days, we'll say, sorry. You'll receive an email with contact info of the lenders who have expressed interest in your loan request. Then you'll want to go ahead and reach out to those lenders and you can compare the rates that they have available, terms, fees, and anything else that applies at their financial organization. And then you can apply for the loan, which is submitting the loan applications and the paperwork necessary. So, how do you get ready and get going to apply for this? So, once again, here's that business plan. Most lenders expect a business plan when you apply for startup funding. And if you need to create one, you can also follow the SBA's free business plan guide. So you also need to look at the amount and use of the funds. You need to know how much capital you need and how it will help your business. You can't use an SBA approved loan to flip a house, though, so keep that in mind. Think about your credit history. Lenders use credit scores to determine credit risk and interest rates. The SBA helps guarantee some loans that otherwise may not qualify. So that's where that SBA guarantee comes in. And that sometimes helps with down payments as well. Sometimes you'll see a down payment for a business loan at around 25%. With an SBA guarantee, that could be knocked down to anywhere from 10 to 20%. So that is a big help. Financial projections. So again, this comes in if you're an established business owner who has been in business for years. You can take a look back and see those different that different data. See what time of year maybe business falls off or picks up, or if you have a pattern of having, a rough year and then 2 good years and then another rough year. So it just kind of all depends. Show your understand your business's finances and how the funds will be used and how you'll pay back the loan. And then you need to think about collateral. Many business loans do require some type of collateral. So you need to see what kind of assets you have. This can be a home, your car, the business inventory, or other property you may own. And then also industry experience. If you have been um, a retail associate, excuse me, selling clothes for 10 years, but you now want to open a business making skateboards, what kind of industry experience do you have there? Are you going to jump in and be successful straight away compared to other skateboard manufacturers, or are you going to have a little bit of a hill to climb? So firsthand knowledge about your industry can make your lender feel a little more confident about making that loan to you. So, what do you need to do? Register with the SBRC to speak with one of our business coaches and to receive no cost consulting and services. Again, helping with that business plan. Understand what funding you need and how the funds will be utilized. So, with that, what do you need funding for and what is it that you don't need funding for? So, if you have a business with um, a lobby, um, for waiting for people to go back into another area. Do you really need funding for a big fancy leather couch straight away, or is that something that you might be able to pay for not with business loans? Do you need equipment? And how are you going to use those funds? So, these are all things that you really need to sit and think about what you truly need funding for. And then you need to realize what amount your business needs and can afford to pay back. So, again, what do you really need that funding for? Once you've got all this nailed down, get on creating that business plan. So, the 7A loan program, and this is from SBA.gov's site, and Brittany's going to be sharing that in the chat for you. You'll see that link repeated in a couple slides after this, and that link that she shared is good for the upcoming slides. So, with the 7A loan program, the maximum loan amount is 5 million. The 7A loan program is SBA's most common loan program. This includes financial help for small businesses with special requirements. This is a good option when real estate is part of a business purchase, but these funds can also be used for short and long-term working capital, purchasing real estate, including land and buildings, refinancing current business debt under certain conditions, revolving funds based on the value of existing inventory and receivables. And this can also be used for purchasing and the installation of machinery, equipment, furniture, fixtures, supplies, or materials. And this can also establish a new business or assist in the acquisition, operation, or expansion of an existing business. So, for a 7A loan, what kind of eligibility are we looking at? To be eligible for a 7A loan assistance, businesses must be a for-profit business. You must operate for a profit. You must be considered a small business as defined by the SBA standards. You need to be engaged in or propose to do business in the United States or its possessions. You need to be able to demonstrate a need for the loan, and you need to use the funds for a sound business purpose. You cannot be delinquent on any existing debt obligations to the U.S. government, and you need to be creditworthy and reasonably assure repayment of the loan. So, with that, how do you pay back a 7A loan? Loan repayment terms vary according to several factors. Most 7A term loans are repaid with monthly payments of principal and interest from the cash flow of the business. Payments can stay the same for a fixed rate loan, payments stay the same for fixed rate loans because the interest rate is constant. And then for variable rate loans, the lender may require a different payment amount when the interest rate changes. So we're all pretty familiar with these. So if you've gotten a vehicle loan, typically you're paying on that monthly and you're paying on principal and interest from that. Normally with vehicle loans, you've probably got a fixed rate on that, so you know that your payment doesn't change a whole lot. But then for anyone who, say, has gotten student loans before, sometimes you have the option to choose a fixed rate or a variable rate. Sometimes the variable rate can be lower than the fixed rate, but it can also go higher. And then you see your payment change from that as that rate changes also. All right, so we have reached the 504 loan program portion. For this, Brittany is sharing the link for the SBA.gov for the 504 loan program, and she's also going to be sharing the link for the Jefferson County Economic Development Corporation's website. With that, I'm going to go ahead and invite Ben to go ahead and speak with you about this. Ben, whenever you're ready to go to the next slide, just let me know and I'll get it changed for you.
Certainly, and thank you, Kelly, for inviting me today to speak on behalf of the Economic Development Corporation. So I'd like to start with a little bit of information on the EDC. So the Economic Development Corporation of Jefferson County, which I may refer to as the EDC, is just like the Jefferson Franklin Community Group is a nonprofit organization. Now, even though we have Jefferson County in our title, we are a nonprofit that was formed in the late 70s to assist in both residential and business growth through many different programs. Now, my department is the SBA department that works with 504 loan programs. Now, the 504 loan program requires that borrowers and banks use the assistance of a certified development company. So that is a designation that we here at the EDC have. We are a CDC, or a certified development company, and we are the only certified development company in Jefferson County. And actually, our next closest CDC in the state of Missouri is in St. Charles, St. Louis, or as far south as St. James. So, excuse me. So we work with and act on behalf of the SBA for this particular package. Now, the little history about the 504 package is it actually came about in the Small Business Act in 1953, and it was designed to help borrowers get access to capital. And the 504, the term 504 came from the actual regulation that was passed at that time. And what this package does is it allows borrowers to get access to funding for their large projects if they follow certain guidelines. Now, one of those is, as Kelly's slide, and by the way, thank you, Kelly, for putting this together. This is a phenomenal presentation for everybody. One of the guidelines is that we can lend up to $5.5 million on that project. Now, not all of that money is funded from any one particular source. It does, like I said, require the partnership with a bank or a funding institution. And then a portion of that then later is funded through the SBA. And then, as Kelly mentioned before, on the other programs or other packages, typically it requires a down payment. The benefit of a 504 loan is that it requires a lower down payment to get access to capital for the project. So let's stop right there and take a look at what those projects could potentially be. So if we go to the next slide, we can see that 504s are for clients that are for-profit businesses looking to either expand or start a business in a long-term capacity. So I am going to add one little caveat in there. The SBA has been working very hard to get access to funding a lot, to make it more accessible, to actually get through the process, try to reduce the amount of paperwork and so forth. So they're continuously looking at regulations to see what needs to change with the time and the economic climate in order to make funds more readily available. So that one little caveat that I was going to mention is there's one segment of nonprofit business that is still eligible for a 504, and that's in the area of childcare. So if it happens to be a childcare facility that has organized their business as a nonprofit, it may still be eligible for an SBA 504, but all other nonprofits usually are not eligible for this particular package. So a business that is looking to either purchase or expand on real estate, new facilities or existing facilities, and then there are the other types of assets like machinery and equipment. Now, there is a difference between short-term and long-term assets, and a long-term or a fixed asset is something that is going to carry forward with that property for a long period of time. So the thing about the 504 loan is that it is meant for a business owner who is going to be there for the long haul. So the examples that Kelly has listed on this slide are on the left side are uses for funds for the 504 loan. And then on the right side, it does have some notes there on some of those short-term or rapid turnover or quickly depreciating assets the 504 funds cannot be used for that. So again, talking about the eligibility, if we go to the next slide, we can see the businesses that are eligible for 504 loans are, again, for-profit businesses. Aside from that minor caveat, we still can check out eligibility on child care facilities. They are meant for the classification of small business, which is anything that has a net worth less than $15 million. and then an average net income of less than about 5 million as reported on federal tax returns. So there are several other things that fall into the eligibility classification, just like filling out an application for a car loan, a mortgage loan. A business loan is going to ask a considerable number of questions. So I'm really glad that Kelly touched on the business plan at the very beginning of this, because the business plan is helpful in so many ways. Number one, it sets your goals for starting the business, what you wish to achieve, how you're going to get there, and then checking back with that business plan periodically through time helps you understand if you're reaching that goal, if you're trending towards success in your business. So with the business plan, the EDC, or our office, along with the SBA, are going to ask the borrower a lot of questions to make sure that they understand the type of business that they're getting into, how they're going to operate, how they're going to be successful with that, and most importantly, to make sure that the sustainability of repayment for the loans is there for the business. And that way, when the terms are when the loan is complete and fully paid off, then you have your fully functional business and you're ready to continue expansion or continuation of the business. So what are the repayment terms of a 504 loan? So similar to a 7A, there are and can be different terms. Now, the benefit of the 504 is the long-term fixed portion. So here is how the 504 breaks down. When a customer wants to start a business and they're looking at, let's say, a land purchase and building for their business, we do have to partner with a financial institution that can actually fund that loan, but the bank only has exposure to 50% of the loan funds. 40% of the funds come from the SBA, leaving only 10% injection required by the borrower or the customer. So the small business does not have to put that 20 or 25% down, as we talked about with other loan programs. So the 504, depending on the size of the loan and the sustainability of the payment, the amortization or the term of the loan can either be 10, 20, or even up to 25 years for the SBA portion of the loan. And again, the benefit of that is it's a fixed rate. So that payment, that portion of the payment that's guaranteed by the SBA does not change over that term. It does have a more palatable early payoff penalty, or excuse me, early payoff. It is meant to be long-term. So even if a business is operating very successfully and has the ability to pay off the loan, say in 5 years, it is considered better to leverage that capital, keep it available, and carry out the full length of the term. Usually once an SBA loan reaches year 10, then after that, there is no prepayment on that, but that's subject to the terms of each loan as it is carried out and funded at the time. So it can vary by loan project, but for the 504, usually after 10 years, that portion is gone. So those are the terms of a 5-year, or excuse me, of a 504 loan, just the basics. It usually follows the same process as Kelly mentioned for the 7A and for most other loans. All of the same requirements: a business plan, financial information for if it's an existing business for the previous 3 years. If it's an individual starting a business, all of their financial information for the previous 3 years, plus a personal financial statement. But we will have a sit down and walk through everything with the business from start to finish whenever we're talking with a new client. So that's what I have. Kelly, any questions for me?
I do not have any questions. If you guys have any questions, please feel free to either take yourself off mute or go ahead and put them in the chat. If not, we will go ahead and move forward. And again, we'll have that questions. Um, we'll have that time available for questions at the very end as well. Um, Right. So yeah, if nobody wants to holler out any questions, we will continue on. Ben, thank you so much for giving us that information. That's wonderful. And then Ben, also, if you would like to go ahead and share your contact information in the chat, that way anyone can reach out to you directly with questions or concerns. We're happy to do that, and then you and I can have the conversation on the back end about tracking that.
You bet. Thank you again, Kelly.
Absolutely. Thanks so much. All right. So, with that, we will go ahead and head into micro lending. And this is also from SBA.gov on their micro loans. Again, Brittany will share the link for that page there in the chat for you guys. So, the microloan program provides loans up to $50,000 to help small businesses and certain not for profit centers start up and expand. The average microloan amount is about $13,000. So, with this, the SBA provides funds to specifically designated intermediary lenders, which are nonprofit community based organizations with experience in lending as well as management and technical assistance. These funds can be used for working capital, inventory, supplies, furniture, fixtures, machinery, and equipment. Micro funds cannot be used for paying existing debts or purchasing real estate, though. So, for your eligibility, this is dependent on each lender. So, they're going to have their own requirements, their own credit requirements, their own business requirements, things like that. And generally, collateral is required as well as the personal guarantee of the business owner. So, you need to, again, look at those credit requirements, length of time in business, if you're just starting up, what your credit history, what your collateral may be for it. So there are several different factors. Again, that does depend on the different lender and funding organization, though. So in Missouri, some popular micro lenders are Alt Cap and Justine Peterson organization. Those two are listed on the SBA site list of micro lenders. And then there's also the East Missouri Action Agency. They have a seeds program for business owners as well. And their main office is located right down there in Park Hills, close to Farmington. And all of these, the links to the website for all of these organizations are shared in the chat. Brittany just shared those for you. And again, that is from the SBA site list of micro lenders, the one with the asterisks. And that link for that list is also shared in there for you as well. All right. So again, whenever it comes to paying back a microloan, these loan repayment terms vary according to different factors. Again, some of it does depend on the lender. So for your repayment terms, it depends on the amount, the planned use, again, those lender requirements, and the needs of you as the small business owner. And then the maximum repayment term allowed for an SBA microloan is 6 years. Again, you've got to think this is that smaller loan amount, so it takes a little less time to get that back, to pay that back. And then the interest rates. That is going to vary depending on the lender. And then you generally see those fall between 8 and 13%. But again, that does also depend not only on the lender, but also your credit. All right. So moving away from the funding information, the loan type information, we're going to talk a little bit about business versus personal funds. So this is something we get a lot here at the SBRC. We get people who call in and they say, hey, I'm thinking of starting this business. And really, what I want to do is I want to get a loan and I want to consolidate I want to get a business loan. Okay. I want to get a business loan and I want to consolidate my personal debts using the funds from that business loan. And then I want to use what's left over to use for the business. That is a big no-no. You cannot do that. Business funds are not to be used for personal debts, for personal bills, things like that. As a business owner, you need to have two separate bank accounts. One in your name for your own personal use, and the other for business expenses in the name of the business or with your name, or the business name, care of your name, or however you want to set that up, depending on your business entity type. But you need to have one strictly for business expenses. When business funds are used for personal debts, you can then become personally liable for business debts, for business liabilities. This is called piercing the corporate veil. So, we have another webinar that talks about business entities and which one might be right for you. So, for example, with a sole proprietorship, that really doesn't provide any protection for you as the business owner because there is no LLC for limited liability. There is no anything. It is you are the business. So whenever it comes to personal liabilities, you are personally liable for any liabilities that the business, your DBA, incurs. So even if you have a business filed as an S Corp, a C Corp, an LLC, if you use your business funds from that LLC to pay, say, your personal credit card bill or your personal home electric bill and not the store's electric bill, and anything happens and you are caught up in some type of legal action, if those business funds financial records are reviewed and it showed that you've been paying personal things out of your business account, then there is no separation between you personally and the business, and therefore you lose any liability protection your business may provide. You and your business are one and the same, and therefore anyone who is suing the business could come after you, your personal assets, your personal funding. So you just very much need to make sure that your business and your personal funds are separate. You cannot use business loan funds for personal things. So please, please, please keep that in mind. That is something that we preach almost on the daily. So, a little bit about the SBRC. As a client of the SBRC, you can get assistance from all of our spokes and not just one. So if you come to us whenever you first sign up, you're brand new, starting up your business, and you need to speak with our accountant so that you can get your business bank account set up. And things like that. That's fine. That's absolutely fine. But then after you meet the accountant, you think, I probably need to meet with an attorney to get a few things reviewed or make sure that I'm doing things on the up and up. No problem. Give us a call and we'll send that referral out to our attorney who will reach out to you and help you. Or if you come and say, I need help with accounting, an attorney, I need to get a hold of a financial organization, and I also need a social media page set up. Okay, we can help you with all of those right then and there. Again, you can get all of that help and then you can, stay in contact with us, and I'll explain a little bit about that and the reasoning for that. But stay in contact with us. And then after you get going a little bit, if you need a little bit more help, give us a call back and we'll send you back to the attorney. We can send you back to the accountant. No problem at all. So we are not a one and done deal. You can return to get more assistance. So, The reason that you must remain active and in communication with our business coaches to maintain your eligibility for the SBRC and for us to pay for your services that you receive from our spokes is because with the grant that we received from the SBA, we have to give data back to them that shows we are helping small businesses. So the SBA wants to know, okay, how many jobs have been created? So if someone opens a store and hires two people, that means two jobs were created with our assistance. How many jobs were retained? How many people did you help obtain funding? Things like that. So we really need to stay in contact so we can get that data from you so that we can continue to help small businesses such as yourself. All right. So with that, does anyone have any questions? Ben is still on here, so he can answer questions, and so can we here at the SBRC. We've got all of us on here also. So if you have any questions, please feel free to unmute yourself and speak up or put them in the chat. All right, we've got a little bit of a quiet group today. No problem at all. Please know that you can reach out to us anytime here at the SBRC or reach out to Ben with any questions that you may have regarding, the Jefferson County Economic Development Corporation or their 504 loan program. And then with that, so training's coming soon. We are actually doing 3 webinars today, this one being the first of the 3. And then at 12:30 Central Standard Time, since we are here in Missouri, we are having a more in-depth webinar about who the SBRC is and how we help small businesses. So that's a deep dive into us, our funding, who our spokes are, how they can help you, and what we do and don't cover. And then later on this afternoon at 3 o'clock Central, again here in Missouri, we're going to have another one on Facebook and branding for your small business. If you are not already signed up for those, you can sign up at on our website, and that is at jfcac.org excuse me, backslash SBRC. Give me just a moment here and I will share that to you as well. Because I did not prepare you with that. That was my bad. Oh, thank you, thank you, thank you. You're wonderful. Brittany's the best, guys. Um, so she's got that on there. That's the link to our website. If you scroll to the bottom, you will see our event little chart there, and you can click on each one that you would like to get registered for. And then also, if you have missed a training, you can go to our official YouTube channel that has our previous trainings on there. We have things on there for disaster preparedness, cybersecurity, and then we've got a couple other previous ones on there as well. So please feel free to check that out, subscribe and follow us on there so you don't miss anything. And then also, if you are looking for specific training or information on a specific subject, let us know. We're always eager to hear what people are needing help with. So we're happy to develop and provide trainings on that. So if there is nothing else, we will say thank you so much for registering and joining us today, and we hope to hear from you soon. Again, if you have any questions or concerns, please don't hesitate to reach out to us. We are here to help. We want to help. So yeah, just give us a shout, and thank you guys so much.
Thank you for joining today, everyone. We